Right guys, welcome back to the channel. So I've got a message from a trader asking what is higher time frame analysis, what is the benefit, and do you need to do it? So higher time frame analysis in explanation is pretty simple, but it can confuse a lot of people, and no, you don't have to do it, right? But this is the daily time frame. So the idea of higher time frame analysis is to start on a higher time frame, get a good bias of where you think the market is likely to go based on, whatever you use for that. That could be a price action pattern based on a structure level, based on right, and then based on that information and where you think your higher time frame is likely to go, dropping down to a lower time frame to try and sort of fight for price, get in at a better price and increase your risk reward ratios potentially, right? So for an example, let's take the euro US dollar, right, on the daily time frame. Now we had a high probability trade set up on the euro US dollar in the form of a descending channel that came into this area on the daily time frame, right? So as we was putting in this ascending channel, again a high probability move that this is likely to roll over to the downside, right? We had divergence on the RSI as well, okay, increasing the probability of this certain setup. So whether this is a descending channel or a certain price action pattern, anything on a higher time frame that there's a high probability of a certain move occurring, right? So I know that there's a high probability on the euro US dollar that at certain levels, descending channels with RSI divergence have a high probability of rolling over and retesting the base of the channel. So I drop down now to my hourly time frame. I can start looking for trade setups that align with that. Okay, so we've got this trade setup here, okay, which is a trade setup that I put into one of the Is Trading Complicated videos, right? Right, so maybe we're going to take secondary targets off at about a 2 to 1, say. Same with this. Let's take targets off at a 2 to 1 just to recoup some profit, right? And then we're going to leave the rest on until it hits our level on the daily, right? So then as we're going through, right, you may look to get short again based on this green candle here, right? Maybe looking for a 2 to 1 for your first target. Right, looking for retest on your second target. And again here, following this down on the 8 EMA, okay, looking to short again, looking for a retest of that low again. And again, we get another entry candle here on this green candle that we probably would have been stopped out of. This would have been stopped out at a 2 to 1, right? This would have got stopped out at a 2 to 1. So them two didn't hit, right? And then again, we get another entry, right? So then we're short again, okay, looking for a 2 to 1, and then targets down at a retest, and we get another entry there, that little pin bar, that little green pin bar there, again looking for a 2 to 1, right? Right, so as you can see, we're taking these trades down, and again we get another entry there, right? Okay, again, that's basically a 2 to 1 anyway. And now obviously this is the power of being able to read price as well, because we've got a level of structure that we're running into, and we're also putting in a high probability price pattern to the upside. So it's not only going to allow us to capture some better moves in terms of risk reward, right? It can also stop us getting into some lower probability moves just below them lows. This is about a 2.4 to 1 on the hourly time frame. However, we know that there's a high probability that this channel is going to test this outside level, right? So now we can drop down to our lower time frame and get in at better entry points, right? Let's say that the hourly is our higher time frame, and this has now been dropped down to the 5 minute. I wouldn't recommend keep going down the time frames, right? I'd recommend having your higher time frame, the set in stone, why you use that, and then you have like a trading time frame, right, that you drop down to, and that's set in stone, why you use that. I wouldn't be going like how we've done here from the daily to the hourly and then down to the 5 minute. Obviously you can, but it just gives you an idea. The multi-time frame is on all time frames, so it doesn't matter whether you're using the daily time frame to identify a high probability pattern and then using the hourly for better entries, or you're using the hourly for a high probability pattern and then using like the 5 minute, say, for high probability entries, right? So as you can see, we know that there's a high probability that we're going to go up and test this level. So as we're moving up to this level, we can use different entry techniques that are going to allow us to potentially capture this move that we are predicting based on our higher time frame, right? Obviously, this would have been something like a 2-to-1 with one trade, but then using higher time frame analysis and dropping down. Right, so we lost one of them and we managed to get a 5-to-1, a 9-to-1, right, a 2-to-1, 2-to-1 there, a 4-to-1, and a 3-to-1, right? So instead of just getting 1 2-to-1, we managed to, get in at better prices. So I hope that answers your question. Again, using a technique like this, I'd make sure that you are comfortable with identifying high probability moves first, and then look to use other techniques to get involved on a lower time frame. It's really going to be just about putting in the work, making sure you can identify the right patterns in the right places, and then selecting the right strategy based on what you're trying to get out of it, right? So I hope you got value from it. If you did, make sure you hit the like button, hit the subscribe button to stay up to date with this channel. If you've got any messages or you've got anything that you want to see or want covered, then make sure you drop us a comment and I'll be sure to cover it. So wherever you are in your trading journey, I hope you have a good week and I'll see you on the next one.